lithium is irreplaceable, right? There's nothing, the installed sunk cost in this industry is so great. You may be able to displace nickel or cobalt and go LFP, whatever, but lithium's needed everywhere.
Ability to control the lithium supply chain in the United States is critical for the development of the battery materials, for the development of the battery manufacturing sector, and for the OEMs to be able to get behind the projections that they've been making.
What makes these DLE technologies fail at scale time and time again is lack of access to energy, lack of access to chemical reagents, and lack of access to infrastructure.
Welcome to this panel. We have Michael White, CFO of Piedmont Lithium, Cristobal Garcia Huidobro, the chairman and CEO of Lithium Power International. We have Emily Hirsch, CEO of Luna Lithium, Erez Ichalov, Managing Director of Traxys Battery Materials, and Howard Margulies, Senior Managing Director and General Counsel of Maxon Capital Advisors, who had a big win last year advising Standard Lithium and Coke. You could read that, and we'll talk a little bit about that. So I just gave a presentation and outlined a big, hairy, audacious goal for America to have 1 million tons of lithium production sometime in the next 10 to 15 years, and articulated a universe of rock, brine, clay, various jurisdiction assets. So one of which is Piedmont Lithium. Piedmont Lithium's articulated a path to 60,000 tons of lithium hydroxide production with two 30,000-ton projects or hydroxide from spodumene, in Carolina and Tennessee. But I don't want to talk about that first. I think we want to talk about the nearest term, which is 3 of the 5 eyes. If you know the 5 eyes from a political point of view in America, our closest friends and allies are Canada and Australia. In North American Lithium, you have an Australian company partnering with an American company, Piedmont, operating in Canada to bring back a mine that was in production in the 1950s, feeding the U.S. Nuclear program back then, and then it's been on again, off again, turned on, and was recently selling spodumene as a few years ago. CATL, the Chinese battery company, for 9 months was taking spodumene from this asset. This asset is now fully funded by Piedmont and Sayona, and is scheduled to start production, I guess, later next year and generating cash flow from 2024. So could you just talk about, Michael, you're CFO, you joined, I guess, about a year ago. Piedmont has grown from like 4 to 40 people, in the last kind of 12 to 18 months. But as you're poised to grow revenues and profitability very substantially, the company is going to grow, a lot more from here. So if you just talk a little bit about, I guess, those two things. One, joining a company that's in this exponential growth phase, but also specifically like what's happening at North American Lithium to generate that near-term cash flow.
Happy to. Thanks for having me, Howard. With NAL, we have a great partnership with Sayona, and for a great asset in a great location, our offtake is 50%, and with a ceiling of $900 on our cost, let's just take the most recent sale, which was $7,700 or $7,700 for SC6. What $900 cap, the profit on that for us would be about $700 million. And so when we look at something like that, and that assumes we get the full 113,000 tons per year. It's very profitable with margins greater than 80% EBITDA. So you take a look at that with our market cap of $1 billion. It's pretty interesting.
You're trading like 1 to 2 times 2024 EBITDA.
That's right.
If owning rock in the ground, like Mineral Resources said, Piedmont's God. Rock in the ground.
You nailed it. I want to be, obviously conservative in some of my views, but to me, it's just absolutely an outstanding project.
And then with that, your other 3 projects, the market's not giving you much value for, but we could talk about that as part of, a broader dialogue. So Cristobal, nice to see you again. Saw you in Phoenix. Lithium Power is in Chile with a very high grade brine that is permitted, very advanced. But your market cap, I'm not exactly sure what it is, but it's in the $250 million range. When I look at that and I see what Rio Tinto paid for a relatively challenged brine in Rincon, over $800 million in Argentina, in a more risky, arguably more risky country in Argentina. And then you had Ganfeng pay over $950 million for a much earlier stage asset, that was 10 times the value that Plus Petrol paid for the Pastos Grandes asset. I see a private to public, arbitrage here. What are people missing about Lithium Power and relative to those? And I would think that in Chile, in some countries, China investment is like off limits. Like Argentina is not one of those places, but I don't know what the state of play is. And they allowed Tangxi, to buy the SQM stake. So theoretically, I would think you have interest from Chinese and non-Chinese. So you could have competitive tension if there were ever a bidding war for your company. So what do you think about that? And feel free to talk a little bit about your project, but I'm assuming some knowledge here already from the audience, which is probably not a great assumption, but I'm too knowledgeable, and forgive me for just focusing on value creation.
No, it's okay. I think it's a tricky question. Thank you for that. I actually don't know. Why is this difference? Clearly, Chile do have a much more, strict environmental regulation than Argentina today. And that, of course, in terms of expectations for future value, it has a big impact. Even though by the way, I do think that the Argentinian government and all the companies there have been doing an amazing job. Okay, in 5 years, they move ahead of us in Chile, way ahead of us in terms of developments, in terms of investment attraction, and that is undeniable. And the biggest question today is what happened, and I really think that is a reflection of the complications that having this very strict environmental regulation is generating for the projects in Chile. We have been developing our project in Maricunga for the last 7 years. Today is probably, because of the timing that we have invested and the money we have invested on this project, is one of the most advanced, real projects in the industry and in the region that have not been built yet. During that development, 3.5 years of that time were exclusively dedicated to be able to get the environmental approval for the project, which we did by the beginning of 2020, just before, the COVID started. And the COVID, everyone knows the problem that generates it. It wasn't a problem of the liquidity in the market. It was an issue of the uncertainties that the COVID was generating on the capex estimates. And when you have a $650 million US project, capex project, and you want to at least, have a 50% leverage through a project financing structure, for example, if you make a mistake on the capex estimate, anything will need to be absorbed with new equity. And everyone remembers the story of Nemaska Lithium. I think no one wants to be that aggressive, make a mistake on that estimate, have to go to the market and say, hey, we made a mistake and the project will cost us, 50% more. And the market is merciless on those situations, So really today, I think that the value of this company were way ahead, in the structuring, financing structuring process today. We have been working with Canaccord, which is our lead financial advisor on that for the last months. We did that because we were receiving a lot of unsolicited approaches from different parties, and we expect to close the equity financing for this project probably by the beginning of the first quarter next year. And at this point, the moment we do that, all those conversations have been done based on the economic value of the asset, not on the value that is being reflected by our market cap, which, like Howard said, we also think is undervalued. It's a good opportunity, by the way, but the moment we are able to announce a binding agreement with that, it will be immediately after reflected on our share price, and probably everything will be level up by then.
Okay, great. I may follow up after talking with the rest of the panelists. So Emily, as much as I think you could add some commentary to the Argentine-Chile thing, we're going to focus on the U.S. Because that's where you're domiciled here now and advancing an American project in Nevada. So there was some recent, yesterday it was just in the press, that a grant which was given to the Salton Sea, Berkshire Hathaway. I never understood why Berkshire Hathaway, Warren Buffett needed to get a grant, right? Of all the people in the space, like, you don't need to give money to. But he was
It's
given.
not charity, Howard. Those are our tax dollars at work. I mean, for return on investment, I would say I would prefer a success story than a charity. I'm a capitalist over here. So.
Okay, but they received a grant, but that grant was rescinded, which we didn't know, like 15 months ago, despite the fact that Berkshire Hathaway was featured, on a panel with Joe Biden in February of this year. So if you could just talk broadly about what's happening in America. You launched a podcast called the Minerals Manhattan Project, which was very much for advocating a lot of the industrial policy that we're now seeing. But permitting reform is still kind of outstanding issue.
Yeah, absolutely. Thank you. First of all, thank you 1-to-1 for inviting me to participate in this great event. Thank you, Howard, for including me on this panel. It's exciting to share this conversation with my lithium colleagues. I think that one of the driving forces behind my decision to start Luna and my decision to come to the U.S. after a decade in Latin America to drive forward the lithium story and to drive forward the exploration story here in this country is because the opportunities that I saw realized in Argentina in the matter of a decade, I think that when we look at where demand is going over the next decade, 2 decades, 3 decades, there are multiple opportunities to repeat that. But it also causes me to reflect a bit on, what sentiment was like back in 2015, 2016, 2017, and especially having had a front row seat to the management of both Galaxy and Orocobre, which is now Alchem, which is now, as you've kind of demonstrated, a unicorn. But the amount of uncertainty that those players had to face, because back in 2015, we were still battling out, are we going to even see EVs or are we going to see hydrogen fuel cell vehicles? And it's made me boil down the concept of risk into 2 kind of broad categories. There are ifs and then there are whens. And the if is this ever going to happen, right? Is this a reality? Are we going to see electric vehicles on the street? Are we going to see lithium batteries in those electric vehicles? Are we still going to see the same kind of lithium batteries in those electric vehicles? Those are if questions. But then there are when questions. And I think that, will we see lithium chemical production in the domestic US? Absolutely. I think we should have at this point crossed the boundary where we have made a decision, or at least there's enough consensus that there is a when to these questions. But when you look at the uncertainty that then still is embedded in that question, you've got the technical uncertainties, which I'll let one of my colleagues who's a little bit more involved in the DLE world, or when are we going to start seeing lithium chemical production from folks like Standard? When are we going to start seeing them come from folks like Compass? But the permitting question kind of ticks and ties with that, because as you'll see with the ability to deploy new technology, you have to be able to scale it to see if that's going to work. And in order to try something at scale, you have to have the permits to bring it forward. And so the when will all of these things come together is still, I think, very much a soft question or up for debate. And I do think that when you look at the idea of permitting in the United States, you can see that it's very clear. A clear preference is kind of demonstrated, at least for dollars spent by the federal government. They like stuff already coming out of the ground. So they like trying to put their money on things that are more on the processing side and not projects that they're on the extraction side. That said, I think that the news this week from that grant being pulled and the kind of news that people are starting to stomach that maybe the Salton Sea isn't the magic wand for the United States predicament when it comes to access to lithium chemicals. I think that the necessity of, putting on your big boy pants and coming to the table and saying, right, in order to have the processing, we also need to have extraction. And we're not going to be living in a world where stuff coming out of the ground can simply be processed and get the U.S. the lithium chemicals that we need. There aren't enough allies in the world to get the U.S. the lithium chemicals that we need. And so I think that that switch on permitting is going to flip. Exactly how it's going to flip, I would say, is still in the air. And I'd be willing to put my feature or my chip down on that. It's going to happen when we have a Republican president and a Republican Congress again.
Okay, well, we may have Congress in a couple of months. We'll see. Okay, so Erez at Traxys. I want to talk about Nemaska. So Traxys is invested in 3 battery materials projects, I guess, alongside Pallinghurst. Actually, I'm thinking of Traxys and Pallinghurst. So anyway, but you're partnered with Pallinghurst. Nemaska was sold to Livent, right? So you're holding now Livent shares, which I think for about $450 million, which I guess was acquired for very little in the bankruptcy. So why do you sell, I guess, to Livent or collectively with Pallinghurst? I guess it's there, but you're along for the ride. And do you plan to reinvest in another lithium project?
Thank you, first of all, 121, for having me here again. It's always a pleasure to participate in your panels, and it's good to be moderated by a friend and colleague like you. I find it a little bit funny to, as also in this case, investment managers to sort of apologize for a 10x in 18 months. It's something that I wish for all my friends and obviously for myself as well. But more seriously, yes, we as Traxys, we have a sort of a hybrid strategy. We invest in equity mainly in our partnership with Pallinghurst, but not exclusively. We also invested in Li-Cycle, for example, which is a good example, and we're now putting together a project for manganese oxide that basically is the stuff that goes into your NMC and now into your LMFP. So we're broader, and in terms of the instruments that we use, besides equity, we also write pretty big tickets on prepayments, and we do talk about capex inflation. So we cover the cost overrun facilities. So the next Nemaskas don't need to necessarily go bankrupt. You can pull the money from the facility, and it's something that we're seeing more and more now because of this sort of uncertainty. We did swap our shares in Nemaska for Livent shares. We're still holding them. The issue is when you're wearing sort of a dual cap, you're an investor, because we are investors with our investors as well, but you're also managing an investment. And it's difficult to turn to your to your LPs and say, look, yeah, we can get a 10x here in 18 months, but we're refraining because we actually want to cut the ribbon on the on the plan 3-4 years down the road, with all the risks that are associated with just the passage of time. So the responsible thing to do was, I think, to capture that, let's call it an exit, and it enables the investors themselves and us as investors to decide if we want to stick along and to what extent with Livent all the way through. And we're still there. So that's sort of where that thing stands. And we definitely see ourselves reinvesting in lithium. and both an equity strategy, and I think there's a ton of upstream opportunities, early stage exploration right here in North America, that look very, very interesting for reinvesting in the next few years. And through our more liquid, soft tiers of investment, where we also have a very big structured finance department within Traxys, and I work with them, so it's sort of a duo effort to combine the various instruments that allow us to take projects into production with Traxys, the trading arm, to be the commercial partner. And we try to embed them into the planning stage, so you don't end up being, building white elephants that some engineer envisioned, but actually finding the need, just marketing 101, tailoring the product to what the market will require, and placing it, in terms of logistic, funding, customer service, et cetera, in the best position that you can. So I guess it's a long answer to basically say, yes, we're very much committed to lithium and to the lithium supply chain. We're hiring people. We're putting reps now in all our regional offices. So it's, although the pan-Atlantic supply chain that we spoke of as the one where there's a hole without a W, is definitely an area of focus, but we're also going to other areas. So you'll definitely see the name Traxys deeply involved in lithium in this decade and the one after.
Well, very good, because we need a lot more investment. So Howard, let's turn to you as an intermediator of a significant investment in Standard Lithium, with Koch, and Koch has made another investment in Compass Minerals. So you know Koch clearly very well, and I guess, DLE and their strategy. So if you could talk about that and anything else that you want to say.
Thanks, Howard. Thanks, 1-to-1, for having me here. It's always good to be with another lithium bull named Howard in a pink shirt. So today's the day. On the subject of Koch, I think it's probably fair to say that while we don't speak for Koch, we certainly have assisted in that transaction, bringing them to the opportunity at Standard Lithium, and there are others that we are also participating with them on. I think as you see sort of the follow the bouncing ball, Koch has put $100 million into Standard Lithium, and additionally to that, OPD, a subsidiary of Koch, has announced they are doing the final feasibility study for Standard Lithium, leading into an EPC contract that will probably begin sometime next year, mid-next year. Then shortly thereafter, we saw an announcement of $250 million Koch invested into Compass Minerals, also a DLE technology. And so in the sort of the overall picture, you see them focusing on DLE, and I think there's a reason why. And the reason is, from a fundamental standpoint, their ability to transact in the U.S. and ability to be part of the lithium growth story in the U.S. has to do with being able to get behind companies that can make meaningful increases in production in a particular segment that they understand and that they can be helpful in. And in the DLE side, they definitely can. They are, by virtue of their background, their history, their experience, and their investments, a chemical company through and through. Throughout all of their investments, you can see the chemistry across every sector. Additionally to that, they like to be part of the critical sort of linkage in the supply chain. And here, in the lithium story, as I think some have pointed out, and you pointed out yourself, Howard, ability to control the lithium supply chain in the United States is critical for the development of the battery materials, for the development of the battery manufacturing sector, and for the OEMs to be able to get behind the projections that they've been making. The OEMs are, if you will, the least, I think, knowledgeable about the lithium story of any of the participants. They've not been able to get their arms around how they're going to make these cars and make these batteries work at the levels they're talking about. And so they're really relying upon us and all of us in the lithium sector to produce as much as we possibly can and deliver it through a means where we're not sending lithium from Argentina to China to the west coast of the U.S. We shouldn't be doing that anymore, and hopefully we won't be. And if we can do all that right, we will be able to supply the battery sector for the U.S. EV market. But like you have said also, it's a very big leap. And we're talking about growth of 10, 20, 30 times where we are now in a space of 10 to 15 years. So it's going to be a tough sell. It's going to be very hard to get there. And some of the economic fundamentals are helpful and some not so helpful. And happy to get into that conversation as well.
Okay, just to build on that, do you think that we'll see Compass hiring Koch other subsidiaries to do the EPC work like they did in Standard?
You could. I think they'll do a thorough review of the market and what they can get in terms of capacity and resources and the ability to execute their projects. But I think it's certainly a group they would naturally turn to, and as one of their targets for doing that. Whether they will select them or not is an open question. But certainly, I think you would turn to a group that's already committed to it and has the backing and the financial resources to supply that kind of engineering protections and guarantees that you want.
How confident do you think they are in both of these projects? Because on the one hand, you see they make an investment of $100 million and then they pay themselves back right away. It's kind of like a riskless investment.
They haven't really, because they're not paying them back anywhere near that amount, and they're certainly taking the risk that their project build is going to go right. And so I think they're taking an additional risk, sort of like the Callaway brothers have doubled down in the U.S. now, where they went from Latin America to the U.S. They've said, yeah, we believe in the sector, and we're going to take risky transactions as some might see it, but with a good deal of confidence, they're going to be successful.
No, I think it's great what Koch is doing. Politically, Koch has a certain profile in America, and they have picked states where they're on private land. They don't have to deal with kind of federal regulations and such. I mean, do you see just like, I don't know, Koch is a very private company, business-wise, but politically, so just with the administration and just the industrial policy that we're implementing, is there anything there?
I think first of all, you have to kind of take a look back and look and survey the market. In the last 3 years, Koch committed to spend $3 billion of Charles Koch's money investing in the energy transition, or they call it the energy transformation sector. And they have spent almost $2+ billion already, and they will spend another $1 billion this year at least, and probably get another $3 billion after this. They've said they understand and they believe in the transition to EVs, and they have committed to it, and they've shown their money where their mouth is. Some who have talked a big game about ESG have yet to put their money where their mouth is. So Koch is on that basis has definitely proven to be correct in making statements that they've gone through and followed through with. Number two, I don't think that politically their issues are this state versus that state. I think they've chosen wisely projects that can get done and built with the least amount of interference from anyone, whether it be state or federal. And certainly they've avoided California, as some might, because you just don't want to be doing business trying to build a project in California, especially if it's a project that's difficult and has technical problems like in Salton Sea. The surprise of the Berkshire Hathaway announcement to me is no surprise at all. In fact, I'm surprised it took this long to get out, that they couldn't find their way to getting the lithium out of that slop.
Well, Compass's partner Energy Source seems to have a technology to actually do that in the Salton Sea, and that's been used and just announced as the licensee, I guess, for the Compass project. So it works on multiple brines, but maybe the government was picking the wrong horse potentially.
I think the Utah brines are quite different from the ones in Salton Sea. I think you'll find there's quite a bit of geological and geochemical differences in there.
Yeah, it's a horizontal salar like Atacama to some degree, right? And Compass is making potash like SQM. One could argue that Compass is like the SQM of America. Okay, interesting. So thanks for that, Howard. I've chatted with all these panelists a lot in the recent past, but not you. So I took the opportunity to do it live here. So I don't know if anyone in the audience has questions. I just teed up one for each. Aris has one. Okay.
Just want to jump in with a quick insert on the Iliad technology that ESM is implementing, hopefully in the Salton Sea, and that's the technology, the core technology that Compass has selected now. And Schlumberger is actually the technology system integrator and it's going to be the tech operator for ESM at Salton Sea.
Right.
So maybe there is some sort of a vote of confidence, and maybe actually Koch will not be paying themselves to do the service, but actually choose Schlumberger as the system integrator for that one as well.
Well, Schlumberger came first into the lithium sector through a deal called Pure Energy, which we brokered, and they saw that there was a way to get that lithium out of the ground in Nevada in a much more efficient way than the previous owners had been able to do. And that's the technology they built and cobbled together piece by piece. It's really a bespoke technology. I wouldn't call it just the plain old Iliad technology. It's quite different. So I think you'll see that project also come to market in the relatively near term.
Well, that's interesting. And then we can turn to Emily, because you've been exploring for a brine in Nevada that fundamentally, eventually would use DLE technology to commercialize.
Yeah, I think that one of the reasons the United States, more than its peers, is going to be the home for multiple DLE technologies to get off the ground is that what makes DLE technologies not work is economics. And what makes these DLE technologies fail at scale time and time again is lack of access to energy, lack of access to chemical reagents, and lack of access to infrastructure. And one of the things where the US stands on the shoulders and then the shoulders again of an elephant standing on another elephant, and so on and so forth of its peers is we have access to infrastructure, we have proximity to these new markets where they're building cathode materials or where they're building battery manufacturing capability. But more so than anything, we're at sea level, on power lines, on rail in many cases, on highways. And so when you look at the necessity to tweak a process or to add more energy, to add more reagents, or to be able to sort of have that kind of flexibility, you aren't talking about building a chemical plant at the end of an infrastructure project like you are in almost any of the cases in Argentina, in any of the cases in Chile. You aren't needing to build the billions of dollars of financed infrastructure. You're talking about places in the Western United States where you already had, I think, was it the Build Back Better plan? You already have this United States of American consensus that we need more electricity. We need more electricity infrastructure. We need more shipping infrastructure. We have crumbling infrastructure. And so I think that when you look at where these technologies will work and where they will work at scale and where the economics will come together to bring them forward is going to be U.S. domestic brines. And whether they are geothermal brines, I think that that's also, I think it's a when, not an if. I think eventually we're going to see lithium chemical production from geothermal brines. I think we're going to see these plants work. I just think it's going to be a question is not, if. The question is, are they going to go through a Nemaska moment before somebody rescues the pieces?
Well, I think you're right, Emily. I think it is a question of when, although I don't think we've really gotten there quite yet on geothermal. But on regular sort of, subterranean brines, I think we're pretty close there. And just to be a little commercial for Standard, Standard's gotten there at a significantly high level of scale for the demo plant in El Dorado. I mean, they've gotten to a level of production that's, you can almost duplicate it into the final feasibility report and say this is going to work because we know it's working at this kind of a level.
It is a question, though, when you look at sort of the commentary of, if you don't own the rocks in the ground, where there's the question of the economics of a bolt-on mineral extraction step to something that's already coming out of the ground. You kind of get into the kind of flip side of, is there something that could happen to the economics of the other side of this that would, do you own the asset if what you own is the widget that you bolt on and you're dependent on somebody else bringing this to surface and you're dependent on the resource behaving the same way over, over 30, 40, 50 years.
This particular resource, for example, in the Smackover, it's been producing, and I think everybody here sort of knows the history of the Smackover. It's been producing for 70 years, all kinds of brine. And all this brine has been pregnant with lithium the entire time.
It's not how pregnancy works, Howard.
Thank you. It has been unlocked only with certain kinds of technologies, including the one that Standard has developed on DLE. But the technology itself is not dependent on whether so and so or so and so brings the brine to surface. The brine will come to surface. We have the right to the brine at Standard to be able to deliver that.
Do the
into
economics of the lithium project justify the extraction?
Oh, certainly, absolutely.
Okay, so if they
Absolutely.
stopped bringing it to surface for other uses,
We would be able to deliver brine at surface on a very economic basis.
At current lithium prices, I think
question.
everything is economic.
No question.
Actually, I want to turn to Cristobal a bit. So there's a DLE conversation there. Actually, these two gentlemen over here are kind of plain vanilla rock and evaporation ponds. But you did explore a little bit of DLE, and I was at the SQM Investor Day, and they put out the Solar Futuro, and they talked about, SQM did, about some ambiguous, big commitment without a lot of detail to using DLE in the future. So your thoughts on DLE, and if you could also just comment politically, Chile is a free trade agreement country to the United States. Argentina is not. So to the extent the Build Back Better or the Inflation Reduction Act is prioritizing countries with whom we have free trade agreements, that should position your project more favorably than some of the Argentine brine projects.
Okay, it's an interesting discussion, the DLE issue here, but I think Chile, and I think you have to analyze this from the point of view of each country. Okay, DLE, I don't think there is any magical technology that will solve the problems of the world. What I do think is that the appearance of these new technologies, like for example DLE, will let you exploit certain deposits and certain resources that maybe, years ago, without existence of this technology, you were not, you wouldn't be able to. Okay, now DLE, it depends on where you use it, the challenges that you will be faced to. In the case of Chile, DLE still, why you would use DLE in a country like Chile or in a salar, for example, like Maricunga, where you have an average of 1,000 ppm of lithium concentration, where you have favorable, a chemical composition in terms of calcium, magnesium, boron, etc. When you already have all the roads built, the transmission line built, so you have access, but in a country in which the use of fresh water, it's a big issue. Everyone knows our stage 1 used traditional technology. That was a decision we took 7 years ago when we started developing the project. It's not something you can change from one day to another, because your environmental permit actually depends on what technology you will use, okay? However, in the case of the stage 1, we will be using around 8 to 10 liters per second of fresh water to produce 16,000 tons of lithium carbonate every year for 20 years. We started working with Mitsui, which, it's public domain that we have an agreement with them 2 years ago on the development and testing of this DLE technology. Each brine is different. Each brine, will need a specific development for each technology. You can't use the plant from Atacama in Maricunga because it's not going to work, just because the brines are a little bit different. We started working with them and using exclusively Maricunga brine. We built a pilot plant in Tokyo. It was tested last year. Results were very encouraging, really, from an engineering point of view. However, the amount of water that will be needed to produce exactly the same amount of lithium carbonate is around 5 times the amount of water that we will need using our technology. We said, okay, there is no doubt this is going to be a technology that will be used. We will continue working on the testing And we will continue working on the reinjection. Reinjection, it's something that everyone thinks is as easy as pumping brine out of the salar. It's not. But not because from an engineering point of view you can do it. No, 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 that's not the point. You can. Okay? It will be expensive, but you can. The problem is that you will be reinjecting something that is actually different to what you pumped out. And from an environmental point of view, when you have a very strict environmental regulation, that is a big issue. You will have to work on that, and that means time. It's not that it's not going to be used. It needs more time, at least in Chile. If you go to Argentina, where we also had a project, everyone will be used DLE, you know, because the recoveries are 90%, and the recovery we have on the stage 1 is 67%. So there's a huge difference. But they don't need to build evaporation ponds. They will just throw the brine over a different area for that brine to dry out naturally. Okay? In Chile, you can do that. It's impossible. It's unthinkable. So unless you reinject, it won't make sense to use DLE, because if not, you will have to build evaporation ponds to dispose from that, you know, brine that you will be pumping out and processing, and that's an issue. So it's a matter of time. We have been working on that. The idea for us is to have that technology as an alternative, as a viable alternative for the moment in which we start evaluating the expansion of Maricunga. Now, an interesting thing is that the use of DLE will let you exploit salars, especially in Chile, that are much smaller, with lower concentrations of lithium. And if you're able to really work on this reinjection thing, etc., with a, you know, lower environmental impact, making available those resources that until 5 years ago were not to the market to be exploited. That's the issue. So I really think that the appearance of new technologies, you know, will help to solve this, you know, huge deficit that we will have if things continue, you know, developing the way they are. Every project looks very pretty on an Excel. A different thing is reality, guys, okay? And whether you like it or not, from the moment you start a project, and I have been living this exactly same situation for the last 23 years of my life. From the moment you start a project and an idea until the moment you're able to become a reality on the mining industry, it takes you between 5 to 8 years. It's like a baby needs nine months to born, you know? Same thing here.
Your neighbor in Argentina, Minera XR, Lithium Americas in Ganfeng, is in year 13. So they hope to be producing next year conventional evaporation ponds similar to Olaroz, and so every brine's different, and you know, the sustainability aspect of various methodologies. You know, you need to be careful in everyone's. You know, DLE is not always more sustainable. Evaporation ponds, you know, and conventional technologies can be very sustainable as well. And hard rock, you know, just conventional mining. So let's talk to Michael again. You have assets in 3 locations. Collectively, you have access to 500,000 tons of spodumene per year. In Ghana, in Quebec, we talked about, and also the flagship in North Carolina. But you also did a life cycle analysis last year, which demonstrated that you could be just a hard rock, conventional hard rock, the way that you put together the Carolina Lithium project, lower I forget exactly, there's water, there's land, and there's carbon footprint, score extremely high from a life cycle assessment. So that any kind of perception that like conventional hard rock mining is somehow unsustainable, that's incorrect, and is also the major area of growth in lithium units that have come to market over the years. So there's, I forget who, mining.com, I think, has put out a recent graphic this week, which kind of shows how lithium production has grown by country, and it shows very much how Australia has grown enormously. 5 mines have come on stream, conventional spodumene. You talk about 5 to 8 years. Pilbara has gone from 0 to nearly 10 billion, or probably more than 10 billion U.S. market cap in 5 years, from a discovery to a major spodumene supplier. So Piedmont in North Carolina is not on federal land; it's local land, and there have been some headlines from last year. There's a very aggressive, in America, politics and the press that anti-mining sentiment kind of make things appear kind of worse than they are. But you just had a couple of events where Senator Tillis, in Carolina, and then also you opened up, in Tennessee, the plants, which show very significant local support at the highest levels of government for your 2 hydroxide plants, and in Tom Tillis's case, has been talking about since 2018. He's been aware of the project, has been supporting the project, right? And it's going through the state mining process. But if you could just talk, like, within the context of, Koch is there in various states and bringing things on, your perception, based in North Carolina, of the timing of, Carolina is now the 4th project, right?
Right.
And Tennessee is even sooner than that, likely going to take Ghana, feed. But if you just talk about, I guess, Tennessee, Carolina, but also Ghana a bit, and
Sure.
political considerations, permitting considerations there, because the market's counting on lithium units to kind of come on stream within a reasonable, timely manner, and Piedmont's been in existence only 5 years, so just talk
Happy
through some of
to.
those.
So spoke just briefly on North American Lithium, which will come online next year, and expect full nameplate in 2024. But really, the remaining 3 projects, the other one is Ghana. It's a wonderful resource on the coast, about 70 miles away from port, a very deep water port, hydroelectricity, highway from the mine site to the port. And so, the ability, when we think of Africa, obviously that can be a very prohibitive area unless folks are willing to really understand. And with our project there, it's going to be a fairly, so to speak, simple process to take that from mine over to the U.S. and process that. We expect Ghana to come online in 2024, and then our plant in Tennessee to come online, our conversion plant to come online in 2025. Tennessee is a wonderful pro-business state. We had a grand opening, a welcoming just recently, and full support. It's already zoned for industrial, and so we'll be able to produce 30,000 tons of lithium hydroxide there in Tennessee. And then our 4th project to come online is Carolina Lithium, and we're seeing some tailwinds pick up on that. We expect to be permitted next year. We did get a wonderful boost of support from Senator Tom Tillis, who is very focused on U.S. Not having a dependency on a foreign nation or a non-alliation to be part of that lithium supply chain. And so it's, I go back to a fully funded project in NAL, and so that will generate significant cash flow, not only for Piedmont in a certain project, but for us to be able to use that in a way that we can bring, our focus is bringing the first to produce, first to bring cash flow projects on first, and so we'll be able to allocate that capital. One thing I'd also like to highlight is the fact that Piedmont Lithium redomiciling from Australia to the U.S., there are, as you know, very few U.S.-based public companies that are in the lithium space, and so that are producing hard rock lithium. And so within the United States, and so with that, we went through a process to ensure that we had a very good governance process, a good board, a list of A-team players on the management team, and as you mentioned, building from 4 people to 40. We did that very strategically. We did that with key players, A players, and very, very strong company. It's
it's interesting. So the domicile, just for anyone who doesn't know, there's a lot of like Australian companies or Canadian companies. Even Standard Lithium is still a Canadian company, but it is fully listed, kind of on NASDAQ. But NYSE. But Piedmont is first and foremost just a U.S. company, which enables it to be in indexes like the Russell 2000 or Russell 3000, which it is in, which doesn't apply to the other foreign companies that are listed there. And another important point, you said you could use cash flows from kind of like North American Lithium to fund, business elsewhere. That's not always the case with an Argentine project, for example, where the funds need to be reinvested in Argentina. They can't be expatriated to fund, projects elsewhere. You're shaking your head that I may be wrong about that analysis.
It's not that they have to be reinvested. It's just that if you export anything from Argentina, you have 30 days to bring that money back through the central bank at the official exchange rate, at which point in time you are holding pesos in Argentina. You can choose to reinvest them in Argentina, or you can choose to do whatever you want with them, but you do have to repatriate the dollars.
It's a currency control measure.
Okay. It's harder. I don't fully understand the mechanics of currency control countries, but it's harder.
It's so currency control is usually to keep currency in.
Right.
This is a specific, if you export something, you have to repatriate it through the central bank into pesos. You can then take it out of the country, and that's where you run into the currency controls. But I would call it like a pre-currency control.
Okay. Are there any questions in the audience that anyone would like to ask any of the panelists? Don't be shy. Lithium, knowledgeable. Okay. Any of you want to ask each other any questions?
Mike, I have a question for you. We've done some business in Ghana and found it to be a very stable and responsible both national and local government structure building projects. I'm hoping you've had that same experience with yours, because it's really quite different from other parts of Africa where you have some difficulties in sort of navigating the administration and the various factions.
Yeah, I want to validate that. We have had an extremely favorable, not only a welcoming, but our observations, it is a very stable place to do business. I'm glad that it does have infrastructure to support something of the project that we have there. Again, Africa has that, you start getting into credit concerns and this and that. But Ghana is one of those gems where, especially being on the West Coast, it fits into our strategy. And when we look at assets, that's a key thing, but Ghana plays right into that.
We're about to start a refinery there, so yeah, I know the drill. It's been quite helpful.
Very pleased.
Just one thing, and Emily, just so Twitter's headquarters are in Ghana, the African headquarters. So Jack, when he wanted to take his sabbatical for a year, it was actually in Ghana. So now with Twitter owned by Elon Musk, he has another reason to be happy with Piedmont. Go ahead.
Yeah, my question is actually about what's it been like recruiting technical talent to build a hydroxide conversion facility, given that it's the first of its kind in the U.S.?
It's limited. We have being that we're headquartered in a suburb of Charlotte, North Carolina, in Belmont, we're strategically located there. Obviously, with the Carolina 10 spodumene belt, there are companies that are lithium-based, obviously, there in that region, and from a mining perspective, but also it's becoming the hub for the supply chain in the United States, from batteries, OEMs, et cetera, really focusing in on that southeastern part of the U.S. But I think talent is and will continue to be in short supply from a technical perspective. But fortunately at Piedmont Lithium, we've been able to assemble a very qualified team, from whether it's on the conversion side, whether it's in building that, whether it's on the safety,
Everyone
environmental
fun
health
from
perspective.
Albemarle ends up at Piedmont at some
Well,
point or the other.
So I won't, mention, go to specific competitors and so forth, but it's not uncommon to see folks move around.
There's 15,000 tons of lithium chemicals produced in America, and they're all produced in North Carolina. And North Carolina is the ex-China hydroxide leader, right? Pretty much. So everywhere in the world, it's hard to find talent for making lithium chemicals. In Piedmont's instance, I guess they have closest proximity to people who have those skills. But what's interesting is, it takes 5 to 8 years or 13 years, whatever, to build mines. We just interviewed Patrick Brindle, the chief operating officer. He's been building and working in lithium, like he's a coal guy, right? He's now one of the more experienced people in lithium, right? So this industry does need to attract a lot more people. If I could stand on a soapbox that Emily often stands on, is just to, there's a lot of talk in America, about manufacturing and processing and clean energy, but there's never any talk, or if it is always negative talk about like mining, or chemical industry jobs. So like the processing and mining, these are good Joe Biden-like blue-collar jobs, right? They can be union jobs, right? They tend to be, there's some of them are swing states, right? There's a toss-up, kind of Senate seat, in North Carolina, right? And in Nevada. Like, I would think that this would be a winning issue, right? For average Joe, regular Joe Biden to be supporting miners, right? And chemical producers and the people who are going to build this industry in America. This is the middle out, as he talks about it. So I'm trying to figure out, how do you go from, loving Tonka toys, right? As a child, a 10-year-old, to Minecraft's the most popular video game, or one of the most popular video games. So Bill Gates, owns the Xbox, right? Like, so how do you go from mining? My sons, right? I hear them, I overhear them. It's coal, it's iron ore, it's, they're digging, they're playing. And how do you go from that to then becoming anti-mining when you're in your 20s, right? And camping out, in tents in Nevada.
Mike,
Anyway.
you need a Super Bowl advertisement in your budget, I think.
Well, good thing our CEO isn't here to hear that. Coming back to talent, I mean, it's all throughout, being that we're talking about not only the asset, but then the concentrator, the conversion, and folks know Patrick Brindle, our chief operating officer, very well in this industry, and he just brought on a right hand for our capital projects, which we, Tennessee, our partnership in Quebec, Ghana. And so, and the gentleman he brought on has 20 years of experience from Rio Tinto. So we're very fortunate to be able to attract talent, but specific conversion in the U.S., I think it is, but we've been very fortunate.
He went to the same school as my partner, Rodney Hooper, who is going to have the privilege to meet him next week when we go down to revisit Carolina and your new headquarters. We have 3 minutes left. Last chance for anyone in the audience to ask a question. Tolga Kumova.
One of your slides, I don't know if you can go back to it.
No. In the video, we could put it up, though.
You were mentioning that asset values of the equity values. I'm talking about market perspective, but You said they're all priced for $16,000 or thereabouts in terms of the on this page.
Yeah. I don't know if that's that's the page of historic multiples.
You're just talking about in general, just the equity prices of the lithium companies.
Yeah, I was saying that the multiples have gone down. I was forecasting, 90 to 138 billion of overall equity market value based on like a $16,000 price, assuming that the market would give a 12 to 15 times multiple to the earnings that you would get from that $16,000 price.
I'm just thinking about the differential and what it actually is in terms of the analyst notes that you read and what they actually use to value the equity companies. And it's a massive gap.
But there's no one who has like a long term forecast like higher than $16,000 or $20,000. I think the long term, most analysts have like 1,500 spodumene, 12 to 1,500 spodumene, and like 15,000 tons carbonate hydroxide, maybe up to 20,000, but even there, I don't think so. I mean, my partner Rodney believes there's no way it's going lower than 20. And Joe Lowry, we just did podcast, likewise thinks there's no way it's going below 20, and it doesn't make sense if you forecast deficits as far as the eye can see to 2030, but then you're forecasting, prices to fall, back to, below the marginal cost producer. And if you go back to the other chart, if you could flip through the rock god chart. So the rock god spodumene software. So this is, if you're in that blue area, right? Those are non-integrated converters, right? These are Chinese converters that don't have their own rock, spodumene. They have to go on market to compete and buy for very scarce tons. And that's why spodumene prices have risen from $500 to $7,700 in the last 18 months. Now, why, if you're mineral resources, are you going to suddenly sell and drop your price? Well, there's this huge demand. Your cathode company, your battery company, your EV company are desperate for it.
Howard, these guys haven't got it right in oil and they haven't got it right in lithium. That's the bottom line. These analysts, they just haven't got it right.
They just like, why is iron ore forwards are always in backwardation, but iron ore has had software margins for many years. So this is a very rapidly growing from a very small base industry, and there are 15 people in this room. Okay, when there are 100 people in this room in 4 years' time, we'll be at that Rio Alcan moment. So when Rio buys Albemarle, okay, for $150 billion, okay, that's when you should be selling your lithium juniors. Okay, that's going to be so we're in 2003, right? We're in 2002. It's 2022. It's exactly the same. 10 years ago. So 10 years ago or 20 years ago?
20.
By 2028, okay, or sooner, you're going to have this parabolic rise, and that's why even on this scoreboard, these are lithium unicorns. I don't have, I think, my much longer list here, but this list beneath 688 million market cap for Vulcan Energy are another 70 companies, that range, from 5 million to 650 million, and a lot of those companies are going to grow. Tolga is associated with one that out of nowhere went from nowhere to $450 million or so in Canada, just making a huge discovery. So there's a lot of opportunity in companies like Emily, companies like Piedmont. Okay, Piedmont is now 961 million market cap. I've been keeping these scoreboards for the past 5 years. I was looking at it when I first came here. I didn't put up that slide. It used to be called WCP Resources. It backed into a shell with, $5 million. It had, an 8-cent stock, and it's now a $1 stock, in Australia, and $53, converted here, in the US. So anyway, there's a lot of opportunity. So these companies that are $1 billion, right, like Piedmont, there's no reason Lithium Power can't grow from 250 to $1 billion or more. There's no reason Piedmont, which is trading at 2 times 2024 EBITDA, if you believe they're going to produce 113,000 tons of spodumene, at 7,000 and make $6,000 margin. So there's a disconnect. There's no reason that Piedmont won't follow in Sigma to $2.7 billion. There's no reason that Sigma won't follow, how Pilbara and Allchem have grown.
So my question follows on this. What is a realistic price that an analyst should use? Putting Goldman Sachs report aside, taking them out of the equation, what should a realistic, 16,000, 15,000 sounds not realistic.
18 over a 15-year period.
You could do that, okay? But who has a 10 or 15-year time frame, right? Seriously, like any analyst, you're going to look at 2024, 25, 26. If you're like building a major project, if you're Coke, or if Coke is throwing R&D dollars, $350 million is, it's still an R&D expense for them. That's like, you need a lot more of that. I mean, hats off to them, but you need billions. I mean, Rio Tinto, again, bought a challenge project, for $850 million. That was 4% of their first half EBITDA, right? So these aren't big numbers in the overall scheme of things, but my partner Rodney estimated when GM and Livent did their prepay deal, okay, he estimated, we don't know this for a fact, but he thought that there was probably a floor ceiling in $25 to $35 range that was acceptable for Livent to accept in order to get, these are hydroxide tons. Hydroxide's very hard to make, and they want long-term stability. So that's a ballpark estimate, and that was like a 6-year, I think, deal that starts in like 2025. So I think that's a reasonable, floor ceiling that a real strategic with a real OEM is signing. But there's so much opacity in this market. Like everything is secretive. Every deal is bespoke, and it's going to be very interesting to see as Piedmont goes through a process, as Lithium Americas goes through a process, as that like the bargaining power. The more we wait, the stronger the hand of these miners. However, the market doesn't fully reflect this yet because we're in. Someone told me the IPO market, like a 25-year-old veteran on Wall Street told me, like he hasn't seen pessimism this bad in his career. Like IPOs have dried up completely. Like we forget, like I'm really bullish. My portfolio is up this year, right? Because I'm heavily exposed to lithium. But the real world out there is down hard. And this is a risk on, like, the leverage. Again, the super cycle, you have your retracements, but commodity equities follow commodity prices. There's no reason for lithium prices to come crashing down. The market hasn't come to accept that. Once the market comes to kind of accept that, the tailwinds behind this thematic are so strong from an ESG perspective, from a government. America is industrial policy. Like what Biden has done has been a huge surprise. COVID was a huge surprise. The war in Ukraine, just further reflects, the need for localized supply chains. So, eventually Europe will get its act together. They're very slow and they have thousands of decision makers to kind of get anything done, and they're distracted by natural gas, et cetera. But they were ahead, of America. America's now kind of gone ahead of them. But lithium is irreplaceable, right? There's nothing, the installed sunk cost in this industry is so great. You may be able to displace nickel or cobalt and go LFP, whatever, but lithium's needed everywhere for as long as as far as the eye can see. So
Really?
I encourage everybody, right? Like 1-to-1. This is like largely a gold conference. Like again, this is a tell. There's not a lot of people here. Okay, this room will be filled in a couple of years. Okay, and so there's a lot more to go, and these valuations are still cheap. Go ahead, Erez.
A little anecdote to complete your narrative here. In early 2017, I was sitting with a friend who was lithium bullish, and we were talking about adoption rates of EVs and multiplying the tons by the cars and the whole thing. And I was a little bit of a devil's advocate because he was very, very bullish, and I was kind of cross-examining him a little bit. And then suddenly he got a call on his, whatever it was then, iPhone 4 or 5 or whatever we had in 2016, 17. And so he answered, said, excuse me for a minute, answered the phone. And I was kind of looking at him, and everyone else in that area was, on it. And he finished his call, he kind of raises his eyes to me and says, well, but what about if it ends, what if it ends up like the phones, if that's what's gonna happen, if this is gonna be the adoption rate and the adoption, and the adoption scale and scope. And at that point, we had, I don't know, whatever, 500,000, hybrids more or less out of 100 million, annual sales of light utility and then passenger vehicles and, in the division. But he was absolutely right. At this point, the supply side is the issue.
Consumer demand, consumer demand.
Switch back.
No, there's no
People
such a
don't go EV.
Right.
It's not the people. It's the OEMs though. They can't switch back. Once they've tooled, they can't go back.
Right.
That's it.
And they're committed. Tennessee, Ford, California,
No.
banning.
But we have to
from
get out of our
2035.
echo chambers and into the real world, because if we continue to discuss this with people who agree with us, it's going to take an extra year.
All right.
Super Bowl advertisements.
Yeah. Oh, okay. Yeah. Should that be done at the Piedmont level, or should that be done at an association industry
the-
level? Yeah.
The Rockstock channel level, Howard.
Okay.
In the 60s,
Okay. Thank you very much. I see we're at 5 minutes ago, so that's fine. Thank you one-to-one and Adam and team for having me and this great panel to talk lithium, and hopefully it won't be another 5 years before I do it again.